Hello, ladies and gentlemen. A huge welcome back to everyone to the special weekend edition of Markets Around the World. My name is K2, and as usual, we'll be covering everything from the latest data and macro news stories to the key levels you need to be watching. If you love markets like we do, remember to subscribe and educate yourself better about how these markets actually work together. I have a lot of important news and data that I want to show you, and I also want to say Happy Father's Day to all the fathers who work really hard for their families. So, let's talk about what happened in the market and the outlook as well. Let's expand the conversation, starting with the news. Big tech is driving the record-setting rally in U.S. equities, offering hope that the market can maintain its momentum despite interest rate concerns. Apple, nearly 8% weekly gain, fueled by its AI push at WWDC, helped boost the rally, briefly making it more valuable than Microsoft Corp. Other tech stocks like Nvidia and Microsoft also saw significant gains. Investors believe big tech might be immune to interest rate concerns, or that AI momentum can offset economic weaknesses. However, analysts warn that the Fed's inflation battle continues. Last week, softer-than-expected US May CPI data suggested 2 interest rate cuts this year, but the Fed later projected just 1 cut by the end of 2024, down from 3 anticipated in March. Despite this, the market remains steady. A low CPI print and a hawkish Fed offset each other. A recession is likely underway, according to Jack Shanup, creator of the Shanup Recession Indicator, SRI. The SRI, which tracks the U.S. unemployment rate, has accurately predicted all 12 recessions since 1946, with only one false signal. The SRI triggers a recession signal when the 3-month moving average of the unemployment rate rises by at least 0.4 percentage points from its prior cyclical low. This latest signal was triggered on June 7th, with May's unemployment rate at 4.0%, bringing the 3-month average to 3.9%. Unlike the SOM rule, which triggers at a 0.5 percentage point increase, the SRI indicates a recession may be imminent. Influential trader Keith Gill, known as Roaring Kitty, increased his stake in GameStop Corp this week. Derek Horstmeyer, a finance professor at George Mason University, described Gill as a true believer in GameStop, noting that he has credibility with GameStop shareholders. Gill, who also goes by DeepF, King Value Online, has reinforced his commitment through his recent purchases. Shares of GameStop soared last month after Gill's return to social media and a June 2nd Reddit post showing his significant stake. On Thursday, Gill updated his Reddit account, revealing an increased stake in GameStop and the sale of some call options expiring June 21st. GameStop's shares are down 3.8% Friday, following a 14.4% rise on Thursday. Despite high-profile stock split announcements from NVIDIA Corp. Broadcom Inc., and Chipotle Mexican Grill Inc., companies are generally taking their time before proceeding with splits. As of Wednesday, 10 S&P 500 companies had announced stock splits this year, according to Burry Associates. This puts the index on track for its busiest year of splits in nearly 2 decades if the trend continues. However, today's approach to splits is more cautious compared to the late 20th century and early 2000s. Last year, there was only 1 split among S&P 500 components, and the annual number of splits has mostly remained in the single digits over the past decade. In contrast, the rate was much higher during the dot-com boom, peaking at 93 splits in 1997. All right, folks, let's take a look at some data I want to show you. We begin with the U.S. dollar's reserve currency status, which remains in a downtrend. The U.S. dollar's share of the world's central bank's reserves fell slightly to 58.4% in Q4 2023 from 59.2% in Q3 2023, according to the IMF. By comparison, the U.S. dollar accounted for 71% of global reserves in 2000. However, it's worth noting that the U.S. dollar remains the most dominant currency by a wide margin. For example, the Chinese yuan's share in Q4 2024 was just 2.3%. The euro's share is around 20%. Is the U.S. dollar's reserve currency status safe? U.S. multifamily real estate prices have plummeted 18% since their peak in 2022. Following a surge in values in 2021 and 2022, Multifamily properties have now returned to price levels last seen 3 years ago. MSCI reports that there is currently $56 billion worth of multifamily buildings facing financial distress, largely held by individual investors. Additionally, approximately $1.7 trillion of commercial real estate debt is set to mature between 2024 and 2026, accounting for 30% of all commercial real estate debt maturing in the next 2 years, amid rising interest rates. Commercial real estate, CRE, is exhibiting increasing signs of weakness. The other data I want to show you guys is, it's impressive that silver has rallied strongly over the last 6 months, especially amid a significant shift from an anticipated 7 price cuts to just 2, which represents one of the most hawkish changes I've seen. Even more remarkable is that silver is now oversold, reaching nearly $30 per ounce. One of them is lying. Small-cap stocks continue to counter the recent rally in large-cap stocks. These divergences may not matter now, but they could. Small caps, comprising 2/3 of the labor market, likely signal that the overall market is overly optimistic. The Magnificent Seven stocks have officially surpassed $15 trillion in combined market cap for the first time ever. Their combined market cap now exceeds 50% of US GDP. In just 2 months, their value surged by $2 trillion. Over the past 12 months, the Magnificent Seven stocks have rallied by over 60%, compared to a 20% gain in the other 493 S&P 500 stocks. Together, they now represent a record 30% of the entire S&P 500. Big tech is consolidating its dominance. Another important data point to note is the increase in food prices in the US. Overall CPI inflation grew by 3.3% over the past year, but food prices have risen much more. Juices and drinks saw the highest increase among all food categories, spiking by 19.5% over the last 12 months. Prices for frankfurters and bacon surged by 7.3% and 6.9% respectively. Sugar and uncooked beef roasts also experienced significant hikes of 6.4% and 6.0% over the past year. Meanwhile, fast food prices have skyrocketed by 31% over the last 4 years. These increases indicate that food affordability is becoming a growing concern. And here's the final data for the week. Initial jobless claims spiked by 13,000 to 242,000, a 9-month high, for the week ending June 8th. This marks the 3rd consecutive weekly increase. The 4-week moving average surged to 227,000, the largest since September 2023. The sharp rise in claims was driven by California, Pennsylvania, and Minnesota, which experienced sizable gains for a second week. Meanwhile, the number of people receiving jobless benefits soared to 1.82 million, the second highest since November 2021. Perhaps the labor market isn't so strong. Let's expand the conversation and take a look at the heat map. Nvidia is up 9% for the week, Microsoft was up 4%, and Apple was up almost 8% for the week. The combined market capitalization of these 3 stocks totals $10 trillion, which is absolutely insane. No one cares about other stocks. These 3 need to rise to push the stock market higher. The Fear and Greed Index is at 38, indicating a fear level. Despite this, the market continues to reach new highs every day, which is quite remarkable. There aren't many earnings reports this week, due to the shortened trading week caused by the holiday. Let's expand the conversation and discuss the key events and economic data scheduled for this week. This week's key events include the NY Fed Manufacturing Survey and Lennar earnings on Monday, U.S. retail sales data, and KB Home earnings on Tuesday. The stock market closed Wednesday for Juneteenth Day, followed by initial jobless claims and the June Philly Fed Manufacturing Index on Thursday, and S&P U.S. Manufacturing Services PMI data, along with May existing homes sales data on Friday, alongside a total of 10 Fed speaker events throughout the week. All right, ladies and gentlemen, that wraps up this weekend's watch list. Thank you for watching, and happy Father's Day once again. If you found value in this video, please like and subscribe. I'll see you all later. Bye for now.